Hey guys, Mike here. So we're always looking for, that catalyst that's either going to push us up, out of this downtrend we've been in, what seems like forever, or finally push the S&P below 20% into crash or bear market territory and really push it down to give us that final downward movement and a bottom at some point in time, right? That's kind of what everybody's on the sideline waiting on. And so I came across something I've never looked at before. And it's a certain index, and when you think about what we're going through today, I thought it's perfect. And so I started looking, the history of this index, how it relates to the S&P, and I think I found something, right? And it really, comes down to two questions. Either this index right here, when it moves up or down, it's either going, actually I say this, when it moves down, it is either going to crash the S&P for sure, all right, or it's going to give the Fed what it needs to stop raising rates and rolling off their balance sheet, right? And give us a relief as consumers and start pushing the S&P up, which in turn will push everything else up, okay? And I'm going to show you exactly what I'm talking about. I never say this. This is not one of those videos you want to fast forward through or anything like that, okay? I'm going to make it as short as possible. Just hang with me, but definitely tell me which side of the fence you fall on. And for my commodity experts in the community out there, I want to bring this to you so you can look at this and tell us, hey, because I'm not a commodity expert. So some of you guys I know trade religiously in commodities. And so if you can share your knowledge with us, I would certainly appreciate it, and tell me what you think about this, okay? So let's get into this. And so it's called the CRB Commodity Index. It is the blue line. The other one is the S&P. As you can see, it's going parabolic over there while the S&P is crashing down, right? And you can see right here, the last time it went parabolic was around 07, 08. Boom, it crashes and burns during the dot-com bubble, crashes and burns. But the one thing I want you to notice in this chart is huge moves up, huge moves down, but it always comes back to baseline. It may take years, but it always does. It either gets rejected off of it or it bounces off of it and moves it higher, as you can see right there, and without fail. Now, the CRB Commodity Index, why is it so important, and why does it make sense to look at this, especially now? Because it has on it aluminum, cocoa, coffee, copper, corn, cotton, crude oil, gold, heating oil, natural gas, nickel, gasoline, silver, soybeans, sugar, and wheat, of course. And so obviously, what are we having a lot of problems with? Prices on all of these different commodities going to all-time new highs, putting stress on the consumer. I mean, you can see wheat, and I put this all the way back so you can see wheat's already tying its all-time high, okay? If you go back over here, you see corn, which I didn't believe was on this one, but it's set all-time new high as well. Then you look at natural gas, and you don't think it can go any higher? Look at where it's been before. It's been up around 14, I think this is all-time high. That was like 2006, I believe. And look where it's at now. Not even close to that. So all the rest of them are setting all-time new highs. And if that happens to natural gas, watch out. Crude oil, again, it set its all-time high back in 07, I believe it was, or 08. And you can see we're not there yet. So we got a ways to go on that one. And the reason why, we talk about the S&P is because what does it have here? It has alternative energy stocks, oil stocks, natural gas stocks, fertilizer stocks, which of course is affected by oil and stuff like that, right? And so this is why. And so this is what's holding up the S&P, keeping it from going below 20% right now, because they're all going parabolic, setting 52-week highs. Now, this is that same index with the S&P, right? I want you to look at what happened the last couple of times this index really took off. The S&P started crashing down way before this index did, okay? The index just kept going up and then trading sideways. Now, why is this important? Because look at what's happening here. Remember the dates. It started crashing on August 2000, right? The S&P did, not the index, okay? The index came later on. But what happened? What crashed the index? Look what's happened to unemployment. Unemployment starts to rise, and then May and June is when that index started to trade sideways and crash, right? If we go back over here, you can see right there in 01, that's when it starts to move down. It does a fast move. Remember, that index moves really fast, okay? Because oil and stocks and energy stocks are very volatile. They move up fast, they move down fast. But that's what you see happening, and why? And don't forget to hit that like and subscribe button, guys, if you get something out of this. Because what happens when unemployment goes up? People are losing their jobs, right? And so that means they're losing paychecks. And then the people around them, working around them who still have a job are looking going, ooh, wait a minute, they're doing layoffs. Am I next? So what happens? What did everybody start doing? They start changing their consumption habits, right? Their spending habits. They definitely start spending less. They start going to the AC unit and they start knocking it up a couple of notches, saying, I can survive at 77 in the house. I don't need it to be 74, because they're trying to cut down on costs, right? They're not going on vacations, on all that stuff. So what happens? People aren't going on vacations. People aren't driving as much. People aren't using the energy around their house as much. All of a sudden, you don't need as much oil or natural gas or any of that stuff, right? They aren't eating out as much in the restaurants, so the restaurants don't need as much food, i.e., demand goes down, prices fall right along with it, okay? And they go down fast, right? Because people start getting out fast, either rotating to something else or just going to cash, okay? So that's what you see there. What happens the next time you see this? We come up to the next one, right? What happens? S&P starts going down around October 2007, I believe it is. What do you see with the index? It's going up, and then it goes parabolic, right? Just kind of what you're seeing now. So it's going way up as the S&P is going down. But of course, what's happening, right? October 2007, all of a sudden you go in November, and then we start, here comes the unemployment rate. Starts ticking up, ticking up, ticking up, and then right there is where you see it start to go really high, and a lot of people start losing their jobs. So what is happening with demand? If we look back over, you can see, look at it. That thing falls off a cliff. That commodity index goes down dramatically. Look at that fall. That is crazy, right? That's what happens when people are losing their jobs, okay? And then if we go forward and we look right here, what's going on now, right? Right now, you see that was the crash 2020, boom. The commodities index has been going parabolic, just going up and up, and now it's really moving, right? As soon as the S&P starts to fall, what does the index do? It goes on steroids. Commodities start shooting up, setting all-time new highs, and are heading towards all-time new highs, while the S&P is down roughly around 13%. It got down around 19 at some point in time right there. But that's what you see happening. So it's like history repeating itself, right? And unfortunately, when you look at this, I don't see any kind of indicator that tells me there's any relief in sight, right? This index is on fire. You know, you can use moving averages. There's another indicator that turns red when to sell, green when the trend is going up, the momentum's going up. You see the MACD, you can see the RSI. I mean, the dang thing, I think it's the daily I'm looking at, has been oversold for like weeks at a time, right? And you can see it's just been moving up since the beginning of 2022. If we go farther back, it's been going farther than that. We go to the weekly, as you can see on the weekly, it's been oversold in oversold territory for weeks since 2021. You know, look at that MACD right there. Look at what's going on top. I mean, I don't see any indication that this is going to end anytime soon. You look at the monthly. Look at that. Look how oversold this thing is. My God. Now, look how far stretched it is over those moving averages, but it doesn't seem to matter. I mean, and then when you go back to the last time this thing fell off a cliff, you can see it happens fast when it does happen. But, you know, what was happening was oversold. The MACD finally crossed over. The moving averages move over weeks later. And so, you know, this thing can move for quite a long time. And that's the thing you need to take away from this right here for sure. Now, the good news is, I say this jokingly, of course, but Jim Cramer did say Monday to buy the dip in oil stocks and stay away from everything else. So if the inverse Cramer indicator holds true, oil stocks should crash in the next 7 to 14 days. But of course, it begs to differ. Is this what's going to crash the S&P or provide relief? And what do I mean? What are we fighting right now? What is hurting everyday consumers, bar none, more than anything else? Energy and food costs. Look in the comments of any video I make, look in, I don't know, any chat rooms, whatever. Just talk to your friends, your family. Everybody's talking about this. And so if that index is going down, what does it mean? It means prices are going down. They're falling off a cliff, right? So if all of a sudden, you know, this is what I'm saying, you got to figure out what camp you're in. Is it going to crash the market? Or do you look at that and say, wait a minute, this is what we need to do what? To bring down inflation at a rapid rate. You can see we didn't have to deal with inflation. Look at this. This was the second time. It was actually a little over 5%, which is actually decent inflation. Between 99 and 02, there was really no inflation. 2 to 3% is total normal, right? 5 was a little bit high. But look where we're at now. I mean, we're sitting there almost 9% for crying out loud. Because we really weren't fighting inflation, right? In the first two examples, okay, that I showed you in the 21st century. Now we are. So the argument can be made that if commodity prices come down, corn and wheat and oil and natural gas and all that stuff, and food prices, of course, will come right along with all of that, then that is huge for the consumer, right? Big time. And because that's what's hurting us more than anything right now. And then on top of that, that will mean demand has been coming down. The supply chain should obviously work their way out, which could also trigger the Fed to slow down or cease their rate hikes, as plus as lowering how much they're rolling off the balance sheets, as they're doing it into a slowing economy already, right? And so that, to me, makes an interesting equation. If you can figure out what that equation is, good luck to you. But the real problem I see is I don't see any end in sight for these commodities to stop, right, at this point in time, either on the charts or anywhere else. And so if you deal in commodities all the time, let us know. But you see some of those commodities still have room to run. And that's the scary part about this, especially coming into summer right now. And a lot of people are predicting this. And we know when institutions get something in their mind, right, and they're saying, hey, let's keep this party going, we don't care what's going on with the consumers, then they're going to make some money, right, and make up for all those losses they had on tech or anything else they were in. So that's the other part we can't control too. But I'm just curious. I mean, where do you stand on that? What do you see, and which side of the fence do you land on, right? And there can always be a middle ground, of course, too. But you can make an argument for either side. So just want to put that out to you. When I discovered that, I looked at that, and I'm like, and it's another one of those things to add to your chart, to pay attention to what's going on in that index, because it represents so many different commodities that are giving us a lot of trouble right now and costing us a lot of money. And so hope you got some out of that. Let me know down in the comments, hit that like, subscribe button, and try to keep it as short as possible, because I could have made this a 25-minute video and I didn't. So I hope you guys have a good one, and I'll see you later.